time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
But yes, Eagle Plains Resources. So this question came in from Brian, who is a long time client of ours. So thank you for the question, Brian. So Eagle Plains Resources Limited, EPL on the TSX Venture, currently trading at a price of about 29 cents per share and a market cap of about $32 million. So Eagle Plains Resources is a mineral exploration company operating in Western Canada, exploring for gold, critical metals, uranium, lithium, rare earth metals, and industrial minerals. But the company is multifaceted, essentially, given that it has a royalty holding company, a project generator, as well as a geological contractor through its subsidiary, Terralogic Exploration Services. And over the company's history, it has paid out more than $100 million in dividends to shareholders through spinouts, and it currently has equity investments through 19 different companies. So, as I mentioned, the company is both an exploration and a royalty company. So on its exploration side, it has over 35 projects in Western Canada, which include 9 option agreements. And I'll quickly show up on the screen here the company's various exploration programs and developments it has in place for the 2023 calendar year. So there is some news flow, but I will not get into the specifics of each as there are numerous projects and I am not a geologist. You're going to hear me say that a few times as I go over this presentation here. So, as I mentioned as well, the company also has over 70 royalties on mining projects throughout Western Canada. But keep in mind, these are royalties on exploration projects that are not currently cash flowing. And in most cases, a 1% net smelter royalty can be bought out for about $1 million Canadian. But all of the company's revenue on its financial statements essentially comes from the geological and exploration services that it provides through Terralogic. So that's a little bit of a segue into the financials here. So this is for the fiscal year end 2022. Now, the financials are a little messy because of the business's operations, which include investing in public junior mining companies. But revenue for the fiscal year was about $17.3 million, up 38% from $12.5 million for 2021. And the increase in revenue was due to a large increase in exploration programs contracted. And again, these revenues are essentially from the business's geological and exploration services that it provides through Terralogic, such as consulting or diamond drilling, etc. Now, one thing that I will note is the company is not profitable on an operational basis before its other items. And this has been the case for the last 10 years of operating. So, they are losing money on an operational basis. Now, comprehensive income was also a loss for the year at a loss of $568,000 or a loss of 1 cent per share compared to a gain of about $885,000 or 1 cent per share for fiscal year of 2021. But like I was saying before, it is quite messy due to its operations and investing in public companies. As you can see, a gain on investments of about $1.86 million that they actually sold, and those are equity investments, from my understanding, as well as some unrealized losses as well on equity investments of $2.4 million. So we can really see, the financials fluctuate quite drastically because of these equity investments. Now, to conclude, I do believe that it is an interesting company operating in the junior mining exploration space. And though the company provides some optionality through its portfolio of junior exploration projects, as well as its portfolio of royalties, this side of the business is a bit of a flyer, of course, even though the company does have a successful track record of returning capital back to shareholders through spinouts. However, there is no arguing that investing for future spinouts, royalties on potential future producing deposits, and royalty buyouts is speculative in nature. Now, regarding Terralogic, where the business generates all of its revenue from, there has been good growth in revenue, but the company has had difficulty breaking into operating profit or even EBITDA over the past several years, which would leave us hesitant on the company. Now, it would be great to see the business ramp up profitability on its Terralogic business, but this is yet to be seen. Now, the company currently has cash on the balance sheet of about $9.5 million with no debt and is likely a business which is superior to most of the exploration companies which we come across, especially considering Eagle Plains actually generates revenue through its Terralogic business. But all in all, with no profitability and blue sky potential reliant on hitting big through exploration or its royalties, we would classify the stock as too speculative for our coverage and our clients. And now, I'm sure people on the internet are going to give me a hard time considering I didn't go through any of their exploration projects or royalties, which have, huge potential possibly. But, who knows? Who knows? And I could have taken a look at each project, but again, I'm not a geologist, and investing in junior exploration companies is just too speculative for us at Keystone.
Yeah, no, it's a good summary. As far as Eagle Plains, there's as far as if you're looking to speculate in junior resource companies, it is an option within that. At least there are some revenues in the business, and there can be some cash flow over time. They've returned capital, as you said, to shareholders. Correct.
Yeah, correct.
These are good things, but the valuing the business right now, unless you're looking at a sum of parts and forecasting future potential returns, in terms of some of their royalty projects, it's just very difficult to do. There's just other businesses that we can find out there that trade at better valuations and have more certainty in terms of their cash flow and similar type of upside and growth. Like there's businesses that Hammond Power is a company that comes to mind. It's been around for 100 years. Over the past 20 years, it's done 3,500% since we recommended it. Over the past year, it's done almost 200% in terms of return. It has 500 plus million in revenues, pays a dividend that whole time, and gave you the blue sky type of returns that you're looking for a company like Eagle Plains with less downside in the business because of the fact that it has operating cash flows. So those are the type of businesses that we look at. Totally obscure. There's no recommendation in Canada on a company like Hammond Power, no coverage. So similar to like Eagle Plains, not like the big banks are going to cover it, but at one point it had a similar, market cap to Eagle Plains in the past, but it has that underlying cash flow, the growth, and the blue sky upside that you're looking for when you invest in a quote unquote penny stock like Eagle Plains. Why not find a business that has those things that you really want: underlying cash flow, good valuations, a growth path going forward, trading at a reasonable price, and you're trying to fix a lower downside in a company like that. So that's what we're looking for. It's not to say Eagle Plains is not a bad company. Brennan said this, within this segment, if you want to speculate on a company that is pure exploration, or they're not pure exploration, but if you wanted to look at a pure exploration company, this company has some exploration upside plus some revenues. So that's probably a better option. We're just taking it up a notch and going to a better company than that. And that's our criteria that we utilize. We want underlying cash flow and consistency and predictability going forward.
And we go through, the financial statements of hundreds and hundreds and hundreds of juniors. And of course, none of them have revenue. It's just straight to the expenses on all of their income statements. Yeah.
And Eagle, like you said, Eagle Plains probably ranks at the top tier of that segment.
Exactly.
It probably does. But, we still don't want to bend our criteria to step outside of that, because then you start to get in trouble when you do that.
Yeah.